For today's session, let me start recording. And it's recording is already there. Okay, that's fine. Hi, good morning, everyone. My name is Ghazanfar Hussain. Before that, let me give a small overview about myself. My name is Ghazanfar Hussain, the taxation partner and the PTG consultant. Here is my overview for the profile, and because mostly the common practice, the trainer or speaker is come, they give short overview of the his profile. So as a part of the same tradition, so I'm just sharing the overview. Associated with ACCA from past 17 years, and started with my career with RSM Pakistan. And since 2013, I'm in UAE, almost 13 years in UAE. In UAE, I have the experience in the audit firm, in industry, and in the consulting. And from past 2.5 years, almost 3 years approximate. So I'm in the practice, uh, primarily focus on the taxation. So as in January 24, sorry, December 24, we have done the Carpotex first batch, the complete training, almost 22 session. So in which we covered end to end the Carpotex, and that is the so far the free of charge. I did not see in the market someone is as a community support, as a professional support, anyone is offering such kind of the training. So this is the value addition that I add to the our professional community. And the second batch also we run on the Corpotex, and in which again we are covered the entire training sessions, entire topics. But in second session, in the second batch, we added the more detail with the Corpotex return filing also, and the actual application of the Corpotex return that was not covered in the first batch. In the second batch, we extend our level of the training up to that extent. So each area of the Corpotex we are covering with the actual topic with the examples. So after September, we are planning the third batch, so more likely maybe in the first week of October. If anyone wish to join, is more welcome. So let's continue the our topic. I'm starting with the this is the our second session for the UE invoicing. Total 5 session for the UE invoicing. So in the first session we call the volume over here. So the first volume or the session we covered the framework of the e-invoicing. The in which we understand what are the 3 layers of the regulation, and how one by one the layers are impacting any taxable entity. So I'll just add the few common points over there. And for the time being, I appreciate always mute while joining. The question I'm going to ask, let's ask the question. You may answer in the chat, or you may open the unmute yourself. Alicia, I think she was the one of the participant who was. We do have the quiz also, where we after the training we take the quiz session in which the understanding of the participant we are testing. Okay, and we are issuing those participant the certificate also, attendance certificate also, participation certificate also. That is the practice that we followed, and if the participant who continue till end, they able to take that opportunity and they participate in that quiz also. And somehow during the session, maybe some point is missed, but at that quiz is to be specific with the multiple MCQs, maybe whatever they skip, they can understand at that stage. Okay. So now I'm going to ask the one question, the U-invoicing applicable at all organization in the UAE? UE invoicing applicable on all organization in the UAE? I appreciate quickly response in the chat.
Yes.
Yes, I appreciate if you reply by yes or no in the chat because everyone, if you open the mic, then that will not be the nice. Because this is these some points that we are highlighting for our understanding. Because what is our understanding? So far, we are 11 participants. So I wish to see the 11 quick response from the participants. Jumna Nasir, Alicia, Manahil, Zahida, then I think the continuous now. I appreciate all the participants. It quickly responds. The when not here, whenever you join any session, if you take the active participation, that will show your activeness and willingness to understand the topic. My topic is not only the marketing content that, so I request the genuine participants who wish to learn, they may join the sessions. It will be helpful by the sessions for them as a learning perspective. So I'm waiting for other participants. Please quickly respond if you are active over there. Because mostly the e-invoicing, the concept is mostly the people they have e-invoicing is not applicable on all the entity. Now the second question, so what does mean by all the entities? Assuming that I'm excluding the end user. Let's come to the slide. So both my slides are visible. See the question that I asked in the first session we covered. Okay, the first session we covered that's topic. The UE invoicing B2C in the first so far the UE authorities not covered the e-invoicing. If we exclude the B2C, we will remain B2B, B2G, B2 government. Okay, so most of the entities are within the framework of the e-invoice. I'm giving you the comprehensive understanding. Again, some certain specific scenario may come and pop up, but I'm saying all the B2B and B2G is 99% within the scope of the uh, e-invoicing. Now, I'm going to ask the second question that is, if any entity is not registered for the VAT, if they are in the scope of the UE invoicing, assuming they are B2B. If any organizer, any taxable, any and business in the UAE, any company in the UAE, they are running B2B, B2G, and they so far not registered for VAT because the threshold is below than 375,000. So are they are within the scope of e-invoicing? You may say yes or no. You want to add the comment that also the welcome, the both way welcome. Alicia, add the value. Okay, that's appreciated. That comment is also appreciated. But if that is not the case, they may say yes or no also. But whatever they want to add, that also. So here the UAE invoicing, regardless of the VAT, even the entity is not falling under the VAT regulation and they so far is not registered. So they still may come in the scope of the VAT. Why? The reason is that e-invoicing in the first session, we covered this area in much more detail, where we understand the e-invoicing as a starting point. Foundation is remain the VAT, but this is the beyond VAT. they extend the e-invoicing is not limited to the VAT regulation. Of course, all the VAT regulation may within the e-invoicing, but the e-invoicing reach is more. And the second, the e-invoicing will be tested at the entity level or at the organization level. This is the another fundamental question. The e-invoicing, when we're gonna test the e-invoicing, when it will be applying on the at organization level or the transaction level. So what is the transaction level role and the organization level role? I appreciate quick response. Appreciate all the participants. Quickly, please reply yes or no. Again, I'm going to highlight if as a casual part of any webinar or online session, if you are joining that, maybe it's not uh, anything for the participant. But if you are coming with the professional approach, with the learning approach to take something, yes, you are on the right platform. You're gonna learn the understanding and the real insight of the e-invoicing. This is the main objective of the e-invoicing that we are running the every Saturday. And this 5 session, and after 5 session, again it will be a restart. Why? Because the every day the new information are coming from the authorities, so we are trying to cover on that. So the e-invoicing, we primarily understand the e-invoicing start from the transaction level. The invoicing primarily starting from transaction regardless of the entity. Why? Because when we talk about if entity is not VAT registered, but the transaction may trigger the e-invoicing compliance, so entity have to be registered for the e-invoice. So here the today topic for the e-invoicing, the business transaction. So let me understand the business. Let me try to share the insight about the business transaction. Business transaction. So the each business transaction, each business transaction subject to the assessment of the e-invoice. This is the rule number one we understand. The second we said even not registered for the VAT organization, okay, not VAT registered. This is rule number one. It may come under the VAT. So this is the second. So the assessment of the e-invoicing that we understand the transaction level entity is not registered for VAT is come under the e-invoicing. So these two fundamental, if just I'm keep refreshing during this session also. So now here today our topic to understand the business transaction and the VAT implication. So again, the VAT implication is not primary in topic in the e-invoicing, but it will be inbuilt along with the e-invoice, right? So we are covering the primarily the e-invoicing, and wherever is the possible, we may highlight on the VAT also. Highlight means we will refer, okay, this the VAT regulation may apply on that, and you have to refresh on that. And after this 5 session, we might look into that if needed. So we might, in the second round, we add the more detail of the VAT perspective also. But again, that will be pure VAT related discussion. But the e-invoicing we so far very comprehensively covered. So let's start with we are saying the business transaction. So business transaction, what is the first part? The facts. The facts, how we gonna get, this is the whole story gonna start now. The business transaction, if let's talk about the sales side, right? Okay, the second one more point, the e-invoicing on the say, who is liable for the e-invoicing? Supplier called seller, here the buyer. Okay, this is the customer. So e-invoicing liability are mandatory on which party? On supplier or seller or on buyer and the customer? Primarily the e-invoicing liability or compliance are mandate on the supplier, primarily mandate. But if the customer or the buyer wish to join, they can join, but what we referring here mandatory. So when we have to assess whether we are falling or not, so we have to identify from the sales transaction. That is a primary, but secondary, you may come in the e-invoicing from the buyer also. But primarily so far, the e-invoicing regulation talk about the supplier responsibility, supplier compliances. So this topic will give us the understanding when we import from the overseas suppliers, so what is the impact? When we make the supply as a UE-based company to the overseas customer, what will be the impact? Okay, so how the five corner model gonna affecting on that? Today, in the group, I shared the five corner model one picture also, so that we also gonna understand today. So let's first is the facts. Let's establish the facts. When we start the facts, so here I'm gonna write the business transaction. So the primarily we're gonna discuss the sales, right? So who's the sales? The supplier and the seller, because supplier word is used on the both side. So that's why I may confuse, okay, the supplier, we are purchasing from the supplier. No, that's why we are adding the word of the seller. Okay, because in the e-invoicing, the terms are used in the same perspective, supplier and the buyer. So that's why we are trying to add same terms. Okay, so here we have to start with the transaction, business transaction. What is the first? Facts, right? So, but we are covering the first point as a facts. So when we come to the facts, so what is the team member are involved? What are the paperwork are involved? Just as a common understanding, when we talk about the sales, so commercial team will be involved. Now, the commercial team means the sales, right? Is there any finance team? I'll just make one here checklist. Okay, I'm gonna add here the finance or the accounts. Okay, or the accountant. Just let me know the finance team is involved here or no. At the primarily finance team is not involved, but the finance team still sitting at the top level. Finance team still sitting at the top. But as we mentioned earlier, this e-invoicing more associate with the business transaction. So what we are understanding here, finance team remain at the top, okay? But while starting the transaction, these sales teams are relevant, right? Why the sales team or the commercial team? Because they are the one to prepare the contract, sales contract, or the sale order, right? Many people may come and say, okay, the accounts, we are one preparing the sale order. So that's why we mentioned the prepare the sales contract or establish the sales. Establish the sales. See here, what we are discussing at the corporate level, what are the corporate structure normally are involved. Maybe in the small organization, one person is doing all the function. Okay. But again, he may understand as a this role I'm performing for the commercial, this role I'm performing as a supplier negotiation, this role I'm performing as a finance, because these are the not primarily finance roles. But if somebody is doing, so he's doing the more than one job. So for him is a good opportunity. He may ask his management, okay, I'm doing the 5 people work, right? To register their value in the or inside the organization. But the primarily we are discussing the sales team, commercial team, the first point of contact, the first point of contact, first point of contact, FAP, is the sales. So now what we are saying, the finance plus sales. But we're going to establish the e-invoicing, how it will be helpful to complete the e-invoicing implementation or the compliance, right? So the sales team is involved at this. So let me take another perspective on the same scenario, the facts. If the before that sales, before the commercial sales, so you must have the purchase also. Like your supplier relation, your supplier relation already in place. So who's gonna handle? Is the finance team gonna handle, or is the purchaser gonna handle? Or it is the procurement who's gonna handle? So again, finance is not directly here. But there is secondary, this person is also part of the e-invoicing. This person is also part of the e-invoicing. Plus the purchaser. Right? So now I'm just establishing the how the e-invoicing gonna implementation are the compliance. Okay. So this sales are the person where he will record this transaction in Excel. In Excel or by handwritten, but he will gonna do that. So the common question is coming, it would be recorded into the ERP or the accounting application, accounting system. So this is the next. So then if we are taking this, so is the finance is involved in this? So who's that? So I'm just writing the IT or the ERP. Is this finance person is involved over here? No. Primarily finance person is not there. But he's still sitting at the top. So the next, but IT or ERP is again joining the hand with the finance. So far, where is the finance role? What is the finance we are doing? So what we are trying to establish, so without having the combination of finance plus sales plus purchase plus the ITR ERP. This is the initial. On top of that, if you're gonna add, I'm just adding because we know the VAT is also there, right? Place of supply and VAT is also there. So now, if you allow me, I'll add the VAT accountant, VAT accountant, or I can say the consultant. This is not the important who is that, but I'm establishing the position. So is the head of the finance is at transaction level himself checking the VAT? More likely is no, but he will remain at the top, right? So what I'm trying to say at the transaction level, let me just at the transaction level, accountant who's who perform the action for recording the transaction. So which means the our resource at the transaction level at the entry point is also part of this e-invoicing project. So what I'm trying to highlight, e-invoicing is a project. It's not one man show. By having the combination of these function, you are enabled to complete your job. Finance, sales, purchase, IT, and the transaction level resource. This is the transaction. So far, is there anywhere ASP? I'm just trying to highlight. So far, anywhere ASP is there, accredited service provider is there. Because when we understand what is the role of every team member or the organization side and the consultant side are ASP. So maybe someone asks, okay, from last 15 minutes we are discussing about e-invoicing, but we are not considering the ASP. Yes, these are the internal roles that the each entity team have to do it. So now this roles, whether the internal or team they can perform, okay, or they can outsource to someone. But again, if someone is saying, okay, I'll come and do it, no. Again, they have to coordinate with each. So now I'm going to establish you the next phase. So here I'm going to give you the e-invoicing project. If one project is there, right? So the project manager will be there. Okay. The leader will be there. From one representative of the project must be there. So they might assign one of that finance, sales, purchase, IT, and the entry level, whoever is the concerned person as internally. But The backend will remain there. Involvement or the responsibility of all this function will remain there. So what I am trying to highlight, this functional of each department remain there if they not perform. So the project of the e-invoicing may not successfully within the timeline. It may complete in the smaller organization, the bigger organization where the volume of transaction is more, the supply side is more, sales side is more, so it will remain challenge. Now the common question, so far we establish, okay, the e-invoicing as a project team you have to establish, you have to share the responsibility. E-invoicing project. So now you have to draw the structure of the project, right? So while trying, somebody is the project PM, we can call the project manager. Of course, then they have the different roles, this sales, purchase, right? So then we have the IT, ERP. So then we discuss about the transaction recording resource. Okay. Might say the accountant, because their understanding is very important. Plus now, plus I'm saying the plus, the finance head or the finance manager or the finance leading role. So these are all the function. I'm gonna give the here the function. I'm not saying any person. These function of any organization involvement will remain there. So in the previous first volume, we covered this area where we understand what regulation is saying. So far we established that there is an invoicing project. Then we established that there is a project manager, right? What they gonna do? This awareness so far is very limited in the market, because why? So now I'm gonna still I'm not jumping to the ASP. I'm gonna say, okay, the e-invoicing 51 fields are mandatory, right? It will go up to 59 fields by adding the some additional field that is case to case may applicable. Right? But primarily saying, so accounting team or the finance person, is the gonna handle all this 51 field? Of course, no. So these fields data required from here, from here, from here, from here, and from here. So this combination of all this data, they will become subject to the e-invoicing. So the joint responsibility must be assigned regardless they are assigning someone or they are not assigning someone. So this is the primary concept of the e-invoicing. If you understand so far here, so we can jump to the next. So of course, we're gonna see in the e-invoicing how the 51 fields are shown in the ERP also. We have our team member Atif is with us, so he already prepared the e-invoicing in the Udo primarily. Will show the live demo in which we're gonna understand how it's gonna impact. But let us reach on that stage. Let's prepare our base, our foundation, then we are able to understand. So then everything is ready. Then the next, because this field, the ESP, he's not, this is not in his scope. This is not in his scope. So this is the internal team. If the internal team capable or the not capable means they have the time to manage this, they can take care. If not, they can assign any third party. Okay. They may assign. But the objective of the PTG e-invoicing to give this insight and this understanding, you may able to build in within the organization such function. This is our primary objective while having the e-invoicing. So let's come back over here now that we are we mentioned the facts. The facts will gonna come from if the sales transaction, the salesperson gonna establish the facts. The facts, we already understand the contract. Who's gonna make the contract? The sales team. They are the primary. So in the contracts, which terms are required, are mandatory to establish the place of supply? To establish the place of supply. This one will come from, this may come from we might say the finance, as commonly people are knows, from the VAT, internal resource, or the consultant, right? The consultant is the FTA tax agent, if I can mention FTA agent. I'm just giving the accredited, because when you gonna look for someone for support, so look for the accredited service provider. Anyhow, but still it's internal. This is not mandatory. This is the optional. This is the optional. So this one position will be gonna appear over here, where we're gonna understand the place of supply. But so far, the VAT since 2018, the many people are familiar with the VAT regulation. But the important thing, what is that normally I used to say in my training, you have to keep up to date. Keep up to date. I'm gonna share one. I share in the group also, but let me put over here. Let me put over here. I appreciate, please mute yourself. Appreciate always mute yourself.
Papa is beating you. Papa. ఒక్క నిమిషం ఉంటే నన్ను ఏం చేయబోదా
Participant, I appreciate mute yourself. Okay. Let's come back. So let me add one more slide that I already shared, but maybe for understanding point of view. Okay, so I just read this slide, but already I shared in the group that because primarily mostly people are familiar with that. So, but anyway. So when we come to the next is the place of supply. So we are seeing the place of supply, who's gonna establish. So normally the finance teams are saying, okay, we're gonna take care with the place of supply. Are the internal resource they gonna take care of the supply? So many feedback came. Oh, people are saying this is the critical point, an important point. This is just for our learning point of view. Everyone is saying, okay, since 2018 we are doing the VAT, so we knows the regulation. It's good if we know the regulation, but then the question is come up, CPT. Maybe in 2018, 2019, you know the regulation, but are you part of any CPT program for the VAT? Yes or no? So let's understand why I'm saying this. So just look at here, the regulation that initially is came and the later on the regulation is got changed. What is the change? While reading that, you will not see any change. The both this original regulation, everything is same, right? But if you see here, in the first, they mention the or, and the latest is amended and only changing this word, the scenario impact may change. So now whole regulation, if you're gonna see, so many people they download in the beginning in 2018, 19, 2020. So just refresh yourself with the latest regulation that mostly change happened in 2021 or 22. The major change or major overhaul in the regulation in the same regulation, such minor change is changing the whole scenario. This is not, I shared one of the example. I'm saying, refresh yourself. What I'm saying, the CPD. The CPD is very important in any professional, any profession. If you are any professional activity, any professional field, CPD is important. Regulation may change frequently, may share the new understanding of the regulation. So I don't want to dive into that in detail, but I just shared one of the instance to understand. For your understanding, you may go and refresh yourself or take any CPT program. Of course, later on we will see any, as I mentioned in the second phase, if we can add whatever the close to the e-invoicing areas we can attach. That is one of the place of supply actually. So the place of supply, who gonna understand from the VAT regulation? So let me take the example for the place of supply. Let's move to the next, then we will discuss one by one. The place of supply, then if in your contracts, the place of supply is not identified, not mentioned based on the arrangement, it will be challenging to apply the correct VAT treatment. You may apply the VAT treatment. I mentioned the correct VAT treatment, right? So then the document, which document you gonna choose? So again, the document type. In e-invoicing, commonly we are familiar with the text invoice, right? But under e-invoicing, there is a commercial invoice also. That is called type, document type. So based on these facts, so far you able to choose, okay, we will make the text invoice or we gonna make the commercial invoice. So this is the another advancement or the understanding that so far you have to understand. I'm attending the many events so far. The paid events were the $150 up to $500. Daily 1 day session from morning to evening, but none of them they come up to such level of the sharing the understanding of the e-invoicing. So they are talk about the at the top level only. So even many ESP they share the demo in the, because I'm not saying they are not capable. Just keep in mind the capability is not discussion throughout in my any training event. The problem is not the capability, problem is the how allocation of your time or energy to any particular area of the knowledge. And such events, mostly the commercially are designed one day session, how much the event is, they're gonna share, because they have to cover their marketing content also. So the each ASP, if they're spending 20 minutes while saying, okay, we are demonstrating, so that is the marketing content. Because they arrange that event to demonstrate their product, demonstrate their sales, not for the sharing the knowledge. The sales, I'm not saying they're saying wrong. This is their primary channel to share the promote their product. So this is the only the point, because we attend many sessions, many participants, gold partner, silver partner, this partner, that partner, because they are the sponsor of that event. So they might share that overview of only. They are not able, due to time bound, they are not able to do that anyhow. So the text invoice and the commercial invoice is the document type that we're going to learn in the live demo for understanding, because theoretically maybe not able to understand. After that coming the e-invoicing. After that is coming the e-invoicing, right? The e-invoicing into the ERP. ERP in IT. That also we have it. We're gonna demonstrate that part and I think the next session more likely coming on that. That primarily we are preparing in photo. So in which you're gonna see, okay, how the data will be tracked. After that, the ASP get triggered. So this is what we call this system readiness, function readiness. Okay. So up to, if you allow me to add the one, just for understanding point of view. Okay. No, it's good with the colored. Okay. So up to this, okay. I'm gonna give you this is part of functional assessment reporting. And this is another term that commonly ASP or anyone is coming to you and they will ask. This is the technical, okay, assessment. The functional gap assessment. This is a technical assessment. Here the IT team will be pop-up, ERP team will be pop-up, okay, but again with the collaboration of their existing, okay, that they need. But of course, the IT team, they will pop up at this stage. That is called the technical assessment. Maybe they have the in-house or they outsource. So to analyze if their function is already tested. Now all the fields or data is available in their ERP and they are ready with that. Yes, sorry, the ASP integration or no. Okay. So this is the point where we're gonna show over there. So let's see. Atif, are you there? If you're able to log in and share. So let's cover this one point only to understand the what we are talking about up at this stage. Okay. So the system readiness, if we can show the fields or the scenario. This is a quick one. Later on, we'll come up with the complete. Arif, will you able to share the screen? If are you there? Okay, let me continue once it's ready. He will come up with that. So anyhow, we're gonna continue with the same. So next is the five corner model. That's just again refresher. We already covered. So just as a refresher, and mostly maybe people are familiar with that. So because this part we're gonna cover when we come to the Pint AI format and the ERP for better understanding. But quick one we can understand. The corner one is the supplier. Okay, that we are seeing the seller. For understanding point of view, the seller. Okay. So next is the ASP, the seller ASP. So this is the seller ASP that primarily. uh, So now the next part, okay, here let's say we are part of ABC company, where at the learning point of view, we are saying we are the ABC sellers, right? Or we can say, okay, the we let's say take the example as a PTG. So we are the seller. So then we have to, this is the corner one. We have to appoint the ASP. How gonna appoint the ASP? The appointment of the ASP, we're gonna log in it through FTA portal, Amara portal, and under our with our credential, and we will search any ASP with we already have the terms is agreed. So if we're gonna terms are agreed, so you might decide it as a standalone, or you might went through the consultant to support for the ASP. Because there are also many SLA agreement clauses which are to be covered, which are not to be covered. So that is the critical, because any IT system when come on the live, many issue may pop up during the first live go live. So who gonna liable for the cost of the in term of the non-compliance or any enhancement in the FTA portal? So for that upgrade, is the ESP gonna charge to the supplier with they are agreed, or they will say, okay, within our SLA is covered. So such technical terms. So here we appoint the ASP. So then it will be linked with our ERP. I'm just simplifying, linked with ERP. So now whenever we raise the invoice, we're raising the invoice over here. So it's coming over here. I'm not just a simplified overview. So it's coming over here, then where the information is flow. Where the information gonna flow. So the information gonna flow towards the ASP, this ASP, corner 3. If the corner 3, because from then he will send to the corner 4. Actually, this is if a non PayPal. If we let's take consider from the standard one. If here we are, let me raise this for better. This example also relevant where the let's go step by step. I think. If here is the PTG and here is the buyer, so I'm saying the ABC is the buyer, right? So now PTG will raise the invoice. Let's assume the ASP is already appointed. So this is the PTG ASP, right? PTG ASP. And this is ABC, this is the ABC ASP. So now PTG raised the invoice from their ERP that already integrated with their ASP invoices over here. So this ASP will verify the role. What is the role of that? Will verify the data, what is required in the relevant field is there or no. If no, he may reject the invoice. He may reject the invoice. And this is the more likelihood the issue may happen at the first stage as well. Why they will reject? Because they will say, okay, because they are the accredited service provider as per the FTA guideline. So the 51 field, all the data is quickly filled required because FTA not gonna validate by SIN. They assign them to validate and then give the data to them, right? Validate and give the data. Now the PTG ASP receive corner 2, then he's sending the data to corner 3, the buyer ASP, ABC ASP. Then they're gonna send to the corner 4, the buyer ERP. So now the interesting part, he received the invoice, but he don't have option to reject. This is one-way street. Just look into that. This is a one-way street. It came here, it came here, and it came here. But we're gonna do that. It's one-way street. He cannot reject, right? So again, the manual approach or the conventional approach, they might. Why he's gonna reject? He say, okay, the PTG given only the SO is for 5 quantity, and the delivery is only for 3 quantity, right? So he'll say, I received the 3 quantity, but you raise the invoice for the 5 quantity. So this is rejected, but he cannot reject. The situation of this buyer, he cannot reject. So what he gonna say? He will call PTG and say, okay, would you please check? There is a discrepancy. Yes, our PO is for the 5, okay, but your delivery is for 3. So now they're gonna reconcile manually. Might be PTG delivered the 5 and their system is not updated, or vice versa also. The PTG only delivered 3, but when come to the account section, they raise as a standard sale order. They didn't cross-check with the delivery. So they will ask, okay, now what happened? They say, okay, if 3 is delivered, invoice for 5, they'll ask for the credit note. So PTG gonna raise the credit note for the balance to quantity. And again, it will come to here, then it will come to here, then it will come to here. So as a concept, this is the one-way street and how the document is gonna flow. And from here, the data will be come to the FTA and
Where
FTA
is this?
response.
This one you change it.
Dear,
don't
please
want to
mute your mic. Okay, so now here we understand how the data go to FTA is the verified data. But at each stage, there is a message or the text messages. The confirmation when the invoice sent to here, there is a confirmation. The traceability from here to here, traceability. And such data is important to kept with their record. FTM may come subject to audit. So the normally ASP is saying, okay, within our system, 5-year retention is there, 3-year retention is there. If you want to increase, you have to pay additional SLA. Primarily, people are not familiar. They're saying, okay, use our portal, even you don't want to integrate your ERP, that also workable. If you look for in the longer run, later on they will come up and say, okay, the data is 5 years completed, it's gonna expire. So after that is not available. So if you want to keep the data, so pay us the additional amount as a XLA. So we might charge, keep your data retention. This is data library. So if the ERP integration is there, we will show you the live also. So such record of the the address confirmation from this stage. Let me change the color. This is the first. This is the second, third, and this is the fourth also. All these messages, the status will remain in your ERP if that function is enabled in your ERP. Because and the dashboard of your ERP gonna show what is the status of the transaction. Is still at here, is still at here, is still at here, or is still received by FTA, and the validation and clearance status is shown for the transaction. And such things are gonna happen within the seconds. Okay. Until there is some error. And you, as a taxable person, we have to keep the record with us. Anyhow, will come up in the detail. We will discuss on that. So let's come to the our topic. So far, I tried to comprehensively define the structure of the e-invoicing and the role of the e-invoicing. So let's understand the next is the correct decision. Okay. So correct decision consequences with the transaction. Correct decision. Now, the second, first we covered the overall phase. So now we're gonna cover the detailed version of the step by step. So here we already mentioning the tagline or the important never decide e-invoicing before VAT and the document analysis. Never decide. So what that mean? First, look into the regulation and the document. Then you come up with the VAT is applicable or not applicable. Right? By standalone is not the decision point. So the first, again, the business facts, document the business facts, party classification, okay, in which category they will fall. The place of supply, the party may be based on the which maybe is a local party, maybe the international party, okay. Because if you define that, the term application is gonna change, right? So let me make another slide for the classification of the party. So maybe is the local party. So local means UAE customer. Or the INT is the international customer. This is just the understanding point of view. When we talk about UAE customer, right? So the more likely they will be also on the PayPal system, right? They have PayPal ID. But let's see, when go to the international, they will not be the PayPal ID. This is what you need if you have to ask if they are in the within the system. In the ERP, you have to add such information. This is one of the information that the salesperson at the contract stage he will require and update into the ERP. Right? So when you're gonna issue the invoice at this stage, so all these mandatory fields that are to be filled in this system. Now the many instance or exception will be there that we're gonna discuss, but let's understand one by one. Okay. So now if the UAE you will say, okay, the 5% VAT is applicable, right? Then you will have to add place of supply. We will say UAE, right? So when we go to the international, then there will be no PayPal ID. So you're not gonna have that information. So then how you gonna go for the e-invoicing? In that case, also e-invoicing is required. So then the dummy placeholder, dummy ID is there. This is within the system of the e-invoicing. So so there is a specific code for that. Okay, FTA under 20 format, they given the code. That code we will gonna use over it. Okay, When it go to the ASP, you're gonna understand, okay, this is not within the UAE. So this place, the dummy placeholder, it will move to the FTA, right? Otherwise, so the corner 3 and the corner 4 is not applicable. So here, corner 1, corner 2, corner 3, corner 4, corner 5 is applicable. This understanding. So based on such classification, the required information may increase or decrease. Anyhow, let's come back on the party classification. So next is the place of supply is important in the contractual term, because currently we are not focusing on that such matters, because our document is not FTA client FTA facing. Our tax invoices so far is not FTA facing. What does mean? It's not going to directly to the FTA, right? It may come in audit and they will check, but it's not real time reach to the FTA. And here, the real-time information to the FDA. The chances of non-compliance penalties or administrative penalties are higher. Penalty is not only on the if you paid 5%, but non-compliance administrative action remain as applicable on any taxable person. So next is the VAT treatment that we understand 5% are the 0% are the out of scope, whatever the treatment. Then the document type, text invoice or the commercial invoice, then the e-invoicing. So this is the how the sequence will be run in the our practical operational environment or into our ERPR. So you may understand all the team member that we discuss. If they are not familiar, if they are not ready, if they are not trained, the continuous challenging will remain there while raising the e-invoice. Why this sequence matter? The same customer, now the same customer may receive different document type. What does mean? Maybe first transaction, they receive the text invoice. Second, they receive the commercial invoice. Same customer, okay, this is the text invoice, may receive the document type, different for transaction. So again, our learning is that transaction level analysis, the transaction level compliance is very important. Free zone, export or exempt label do not automatically determine the outcome. Again, so if somebody say, okay, I'm in free zone, as a previously I'm not charging the VAT on XY transaction. So please understand, do not keep relying on your old understanding, refresh your understanding. Take the CPD, continuous professional development, means the latest regulation. By yourself, by with any academy or any the continued training program. The point here, I already give you the one example, the law, how the law is changed. This is the beyond that, but this is the minor change also, the why they did in 2022 or June 21, because they are already working on the tax regulation. Some VAT regulation may contradict with the taxation or e-invoicing. So because so far we are discussing the e-invoicing, but the UE authority or the administration working on something advanced that currently we do not familiar with that, because we met with the FTA tax policy maker and they said we are working for last 10 years on the corporate tax. We never knows, but Ministry of Finance, they have their team, they are working as a policy maker. So they spent 15 year, 12 year stress policy that we knows in the 2022 or 23, okay, the tax corporate tax is there. But still many things are under policy design, still under the policy design. Maybe next year, we don't know what are the new regulation they're going to announce, right? So in the continuity of the e-invoicing, the next is the just for understanding the VAT return will be auto-populated. more likely it will be popular because your data is already there with FTA. Everything is documented. You have to review and submit to the FTA. This will be not optional. So any of many things good for the business, good for the country, good for the regulatory compliance purpose. So authority is vision is longer, and they are considering all the associated factors. So next we are saying the ERP rule reproduce the approved sequence sequence. Okay. So if in your ERP such transaction type is already mentioned and you have the inbuilt the outcome of that document, I think that will be help and reduce the chances of errors. So now while doing that, what are the evidences are required? What are the evidences are required? Contract, commercial flow, supplier and the customer and supplier status, delivery, performance evidence. The delivery, just take the example if goods are out from the uh, store, but it takes 2 days to reach to the customer. So your delivery date when the customer is received, when your customer is received. The common understanding is that, but here the commercial terms are there, Incoterms. What are the Incoterms? As per the Incoterm 2020, what are the Incoterms in your contract is mentioned? Is TDP, X work, is the CFR? Search on the Google the Incoterm. If your commercial term is not defining that, so the implication is may change. If your term is the X work and the contract, so this when out from the here, you may invoice. Right? It's considered is delivered. Okay? X work. Even the terms is written X work, but support you want to start delivery, still as per the contract, your delivery date remains same. So you're gonna liable to raise the invoice also. Right? So it may happen vice versa also. So this is the critical point we are trying to share. A delivery or performance evidence, because if you say, okay, customer is signed after 2 days, your Incoterm is a different, okay, then doesn't matter when shipment is out. This is the common in the free zone. Designated free zone, such activity is a very common. The regulation is getting changed. If your commercial term is defining something, normally we are familiar with designated zone, they do not charge the VAT on the invoice if from designated zone come to the mainland. Designated zone to mainland. Why? Because the under importer record. But if your contract is not written, these terms are structure. Okay. If contract is written the X work, then you have to charge VAT. Even it will be pop up under their record, but your treatment is the X work. But that means the delivery, who's liable for delivery of goods? So that rules is changing the treatment of the VAT. If anyone is in the free zone, let me know so we can ask him the practical transaction if they wish to share with us his insight or his implication. Any participant who's working in the free zone and he would like to participate, so appreciate. So please open your mic and share the insight. As a practical transaction, I appreciate any participant to take the participation, share your insight on that. Anyone? Because free zone is very critical area, designated zone is very critical area, and you'll come back on that. Okay. So we covered here the text classification and legal basis it may change. It went wrong. Let's here. I'm audible. Quick response appreciated. I'm audible. Okay. Thank you. Thank you, Elisha. Uh, uh, okay, we were covering the text classification legal basis. We already understand that part. The PTG rules, we are saying establish the facts. And to establish the facts, we already discovered that or established that the project, e-invoicing project, one team must be there who's going to establish the facts. Then the VAT regulation, then invoice, ERP and ASP. Even you see the ERP and the ASP is laying at the tail of this process. So what happening in the market, what we've seen, the people, the companies are onboarding the ASP and they're saying, okay, our compliance is done. So we are recently visiting the multiple client and they're saying, okay, we appoint the ASP, khalas, everything is sorted out. So then we explain to them, okay, this is laying at here. His role at the end. So who's gonna prepare your internal gap assessment, the compliances, the transactions? So that is the more important and the time taking, right? I'm not saying the ASP appointment is not mandatory or they're not. Parallel, the more important is that you have to prepare your organization also. Prepare your organization also. Let's jump to the next, okay. We are transaction classification is the first scope gate. First scope gate. Okay, so now the first we have to understand as a see what we are saying, the gap assessment, functional analysis. Okay, so the similar pattern we are discussing. What is the reality to be documented in the each organization we are trying to cover one by one in sequence. So if you are following us, documenting the similar process, you may able to ready your organization for the e-invoicing point of view. Somebody come and say, you are able to discuss with them, okay, we already there, we already there, we already reached there, we already reached there, right? We normally share such slide also. You can prepare one by one following the same sequence. So, okay, the first scope is the gate. So we have to separate our business transaction, whether B2B, business to business, generally within the mandatory scope. See here again, we are using the generally. Why? Because maybe facts and the contractual terms are different. So we not saying the mandatory, we are saying the generally because exception may there. Generally within the mandatory scope, subject to exclusion or phase implementation. What does that mean phase? Because 30th October 2026 is the deadline for the phase one. What is the phase one? Above 50 million. If your revenue is above 50 million. Now, the another the practical reality is that how you gonna calculate the 50 million threshold? Because this is the same we seen in the first return, corporate tax return. Many people have the error in their return. What is the error? What is the error? I'm giving you the highlight. You make check in your circle. In city return, what is the first they're saying that revenue? Okay. The revenue, when they come to the revenue, okay, so they, which means the sales plus the other income. Right? or any other income that you have. So this is the threshold calculation, because normally the value that return is taking, that is not matching with your audited financial statement. Why? Because this is the city revenue calculation. This is not the audited financial calculation. So in the FTA guide is already mentioned how to calculate, because what they done, mostly people here also put the same figure, that is the audited sales figure. They're saying yes, FTA mentioned the as per applicable IFRS, and as per applicable IFRS, our revenue is shown in the audited financial, so we are below the threshold. So here the case, I'll give you the example. Let's take one practical example for better understanding. I normally stick to the topic because the time bounded activity we have to complete. So anyhow, SBR, small business relief, and now they extended. Okay, the SBR earlier it was the December 2026 is the expiry date, as per the given deadline. Now, thought is what they extended up to this 31st December 2029, right? So the SPR is one of the very correct example. Let's say the company A, their sales is 2.5 million, but they have other activity. The revenue, okay, the revenue from other income is this is the million, this is the 0.07 million. So total is coming 3.2 million. So what is the error happened? They mentioned this one. They said, okay, our revenue is less than this, so we are eligible for SPR. And they submitted the city return. So now you guys let me know, is this correct? The threshold is here. Revenue threshold is exceeding the 3 million, is exceeding the 3 million, and the organization has submitted the SBR. Maybe internal team, maybe a third party. That is not the point. The point for our understanding, even we have the similar other, the fellows went in the tax training and all together. At the last moment, they come up with such pain point, because in our during training also will teach us the similar point. Okay, go with as per IFRS. So as per IFRS is the correct. Is the correct, right? This is the IFRS saying your sale is this. Okay, all other is the other income that is not part of your revenue. When we come to the FTA corporate tax return guide, they saying no, other income also will be included in the revenue calculation threshold. So anyhow, this is what we are trying to make. CPD is important, continuous professional development, and the CPD plus the experience. What is the experience? The practical use cases. You may discuss with your similar fellow, okay, how you gonna treat this, what you did this, so that you are sharing your experience, he's sharing his experience. So while understanding each other experience, maybe your understanding is refined. We are coming here, we are discussing the practical use cases, how it happened. Okay, so now this entity is not eligible for the SPR, but they submitted and they may continue to submit it, because the internal team, they know, so okay, our sale is this. So what they are doing, remain non-compliance, right? And many people, they are another use case if we are come on this point. So our corporate tax return tax period is started, most of the period, let's say tax period started from the 2024, 1st Jan 2024, assuming that this is. So now the last saying, your revenue threshold less than 3 million in the current and the previous periods We have the cases in now recently we've seen, okay, what this the thing, okay, in 24 their revenue is at 2.5 million, okay, but in 23 or in 22 they are 5 million. This is the 5 million, or here we can say the 5.5 million. Somebody they consult and they said, okay, the previous period, because you're in 23, your revenue is on a higher side, you are not eligible for the SPR. Now, I'm just going to highlight the wording of the law. So, what the law is mentioned, understand, this is your first tax period. So, if your first tax period is at 24, so this is relevant for you. This is before tax. Whatever your sales revenue before the first tax period, that is not relevant. The term previous tax periods, the focus will be tax period. So this is not your tax period. So you are eligible for SPR, whoever is not consulted properly. So he lost that opportunity because many small organizations, the profitability may be up to 1 million because this is the self-managed businesses. And now if he lost, earlier he was up to 2026, now up to 2029. Just imagine how much that 9% tax they are paying. Still, many people may be not familiar due to this misunderstanding or due to any other reason. Let's come back to our topic. Okay. So the point is that how the regulation are the implemented. The first we are seeing the B2B. The B2B, we understand what are the exclusion. If we are keeping apart from the exclusion, if we are part of the exclusion at the phase one. But apart from that, we have to look into that key evidence, customer legal status, TN. There is another important, the TN and TRN is also both are different terms. Okay. I hope your customer tax number and the customer registration number. So let me add here the one additional slides. This be such thing theoretically maybe sorry. This may be relevant for where the combat group. Okay. Because when you're going to register for the VAT, if you have the three companies, A, B, C, so what FTA is saying, okay, register all the company first with us. So they will issue the TIN. Right? First you register with the TIN, then you're going to make the group. They will say, okay, nominate any one company. Let's say we nominate the company A. So this will be tax group. But behind that, every entity have own TIN. Okay? Group representative. Tax identification number. Okay? This is the tax identification number. So here, when you register for the group, you apply, so then is approved. So you will register TRN, tax registration number, as a group. So maybe this is the first case. Maybe if this company is already registered for the VAT, they already have the TRN. But now you're going to apply for the tax group. So they will suspend this TRN. Right? So this TRN will be suspended. But for the e-invoicing, you require the TIN number, and that's even the TRN. What we understanding, the FTA more likely will be activate, or it will be continue with the TIN. Okay. For the even in the group, you are registered for the VAT group, but still each entity TIN number to be registered with the e-invoicing. and while onboarding the ASP, each trade license, I'm gonna trade license, and each TIN or the TRN must be registered with the FTA. So I'm going to give you the example. If previously VAT group are there, when you go for deregistration, FTA will ask, okay, give me the breakup of how much you sell over here, purchase over here, how much purchase over here, how much purchase over here. Still, they are tracking the individual, the purchase sales. If let's say this company's sales is less than 375, okay, from last 3 years. So what the regulation is saying? If your sales are below the mandatory threshold, so you have to apply for deregistration within 30 days or 20 days. Guys, I appreciate, mute yourself. Isha, would you please mute yourself? Okay, so please continue to mute yourself. If you have something, please let me know. I can take the question also. But otherwise, please. Okay, so here we have to provide the breakup of each while deregister, while they are assessing, okay, if this company is below 375, they will apply the penalty. Maybe the many people are not familiar. So this is the reason they are testing also. Anyhow, in the VAT group, there is another first 24 months. Yes, this is the 20 working days. 20 working days. Okay. The first 20 within the VAT group under, I'm talking about the e-invoicing. Within the VAT group under e-invoicing, first 24 months, there is no intra-company invoicing. Okay. This is the grace period they given. But after that, this company will raise invoice, this company will raise invoice as we are raising the invoices to third party through the e-invoicing. Of course, manually we are raising the invoices. As you know, the intercompany transaction, we are not raising the tax invoices. If I'll use the correct word, the tax invoices. So here, first 24 months, they said, okay, it's not mandatory to raise the intercompany invoices through the e-invoicing, but afterward, it will become mandatory. And practically, we heard that now in the VAT group, where the free zone, the mainlands are within the same VAT group, they are FTA is approaching them and they're saying, okay, deregister this. Due to the practical implementation implication of the designated zone where the sales tracking are challenging. So that's why they may not raising the intercompany invoices. So to ensure such things, so they are tracking one by one of the VAT groups where the free zone, designated free zone, and the mainland companies are there within the same VAT group. Okay, so next is the VAT and the e-invoicing are, okay, so let's gonna discuss the VAT and e-invoices are connected but not identical. What does mean? A transaction can be in an e-invoicing scope even when the VAT is not registered. Same point we discussed previously. Try to understand the VAT and e-invoicing are connected but not identical. They are connected with each other, but not 100% they are e-invoicing relying on the VAT. Okay, the transaction can be in the e-invoicing scope even where it is not registered. Yeah. Yes, please, let's take the question. Okay, I have question. Did we can issue intercompany sale purchase note? Yes, see what we are okay. Let's let me clarify this point. See, so far we are whatever law is saying is mandatory to be done. We are discussing that side. Okay, so that doesn't mean the intercompany transaction within the ERP you will not record. We are saying what are the implication of the invoicing? The other side, because we are not gonna may not able to cover all the scenarios. So primarily we are focusing on the okay, law is saying do this, do this. Okay, whatever is not getting triggered. Okay, this is maybe remain within the scope or out of the scope. Yes, intercompany transaction as previously we are raising within the ERP. Yes, we're gonna keep raising, documenting in the and previously cost also we're gonna document. Thanks for asking the question because many other people also may have the clarification on that. So first, standard tax invoice usually required B2B, B2G government. In B2C, we earlier understand is not required. Zero rated tax invoice still may be required. Zero rating evidence remain essential. Okay. So now, here another point is that I'll just give you the example under the in June 21 when the regulation get changed. So what they said okay, if the company is always any organization always making zero rated supplies, okay, if they wish they want can apply to the FTA for exception. What is the exception? While filling the application at the bottom, they will ask, will you make always zero rated supplies? If you say yes, the exception box will be pop up. If you want to opt for the exception, and you just make the tick and submit the application. What does this mean? Yes, you are making the taxable supplies is above 375 is mandatory to register, but you opt for the exception because why we have to every quarterly, monthly submitting the returns. Just imagine the relief. You don't have to carry that burden. So this is the exception is available, and even now company, whatever they wish to apply for the exception, they also can go for the exception, but previously they not apply for the exception. Now the second question commonly coming, okay, so how we gonna claim the input refund? So that you have to take the your call, whether what are the our usually expenses where we are paying the VAT is beneficial, cost benefit analysis, cost benefit analysis, okay, is good or no. But the point I'm sharing here, even you applied for the exception from the VAT, that doesn't mean you would not subject to the e-invoicing. UAE E-Invoicing is remain applicable based on the transaction that we have to understand. Okay. Some exempt transaction remain within this scope while specifying financial services, exclusion may apply. So the financial services are for banking transactions or insurance transaction. That is the particular one area that we come up on there and that we say implicit fee, explicit fee. So any of that is the precisely one domain, financial services. When come the financial services that take commonly the banking sector for understanding. Okay. So most of the participants, we are not, everyone is in the banking sector. So let's go for the out of scope. Certain business transaction can remain within the system, use as the commercial invoice, understand. So here we, as we in the beginning discussed, okay, the invoice is out of scope. The transaction, business transaction is out of scope, okay, but the invoicing we have to issue as a commercial invoice. That's why they given the commercial invoice, okay, the VAT, they are not within the VAT regulation. So you're not going to issue the tax invoice. So here, if you understand, okay, they cater the VAT regulation, but they keep their own regulation. Okay, they think we need the e-invoicing, regardless you're going to make the tax invoice or the e-invoice, right? The compliance should be there, but whatever the transaction falling under e-invoicing, that should be documented. This is the primary area, the scope that we are going to highlight over here. Okay, so no supply, pure compensation, dividend, deposit required rather than invoice. See, some entities are passive income. Passive income. I'll give you the example of the family foundation, one of the example, practical example, family foundation. What they do, they invest in the real estate, they keep the funds in the different businesses. Okay. So they get the dividend from there, but they are not active in the business. They are not issuing the invoices. So as long as there is a no transaction, so you are out of e-invoice. Just understand, as long as you're not raising the invoices, so then how you gonna track on that, right? So this is the passive activity, and deposit means the bank, you kept the deposit in bank, you will keep getting the, the interest income from the bank. Dividend, as you invested in the other companies, you are not raising the invoices, but you are getting the profit. So, but in certain cases, the deemed supply concept is also there. Let's see the deemed supply concept we're gonna see in the advanced stage. So far, any question, please welcome to the question. Let's move to the next one. If somebody already raised a question, okay, it can be built commercial first, okay. A deposit received as a guarantee will need commercial invoice to be issued. See, that deposit received as a guarantee, that again the circumstances, we have to look into that. What are the circumstances where you're issuing the commercial invoice? As it generally may come, I'm not gonna say, because in each area the facts are different. So what we were discussing over there for the banking transaction, but what you you mentioned over here, maybe the advance payments in that pattern. So that was the purely the passive income. Here will be not that scenario. Okay. So if the fundamental difference is there, because as you mentioned, the guarantee, so which means you are in the business transaction, active business transaction. So maybe you are falling in the same, the refundable deposit, maybe in which scenario you are given to that. Okay. So what we are discussing over here, that is the passive income is coming to establish that issue, the invoice. Okay. So particular refundable deposit, you are involved in the business transaction. There is the more likelihood you are coming under the uh, uh, maybe the VAT or maybe the commercial. But particularly to address as a common, we have to understand what are the because normally the deposit as a common utility they are issuing as a guarantee. What are the circumstances? Because the many kind nature of the deposits. Uh, while looking into the specific facts and figure, that's from the beginning we are mentioning, look into the facts, analyze the facts, establish the position, then look the bad position, then look the invoicing position. Okay. If you are issuing the invoice, okay, so maybe you are consider first which VAT regulation is saying you are within the VAT or within not VAT. Okay. Even you are outside the VAT, as long as you are issuing the invoice, yes, there is a chances you are coming under the commercial invoice, because you are already issuing the invoices. The example that what we are discussing here, the deposit to the bank. When you given the deposit to the bank and you're gonna receive the income from there, so you're not gonna raise the invoice for the income. Just understand. Even when you give the deposit to the bank, okay, you're not gonna bank is not gonna issue the invoice, right? The contract may be issued. Just understand from that perspective. And come to the next. Okay, the goods or services require different place of supply evidence. This is the other critical area, or the most important area we have to look into that. So what is the goods and the services? The place of supply will play the vital role while identifying the uh, position of any tax base or the business transaction position. The legal conclusion must match with the operational reality. What the law is saying and what is the operational reality. Operational reality, you have to establish by the evidence, like the goods. Like the goods, okay. Let's take the 5-minute break. I think we can continue from there. Let's take the 5-minute break, please.